What's going on, everyone? Gilman with Wellthy Stocks, back with our daily Apple update video, ticker symbol AAPL, where we take a look at how Apple stock traded today, key levels of support and resistance that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let me go ahead and hit record, and we can get right into the video. So actually another really nice green day for Apple. All this week has been really nice for Apple. Great move up as we've seen. We're up another $2.46 on the day, which is about a little less than 2%. And keeping the push up in the after hours, which is absolutely great to see. That came on the day where the NASDAQ was up about 1%. The Dow Jones was up only 76 points, which is about 0.23%, and the S&P was only up 0.47% as well. It did make a new all-time high today, so that's what we saw there. But Apple is doing phenomenal, finally starting to really, pick back up. We'll talk about a couple key things today, but before we do that, why is the market up? So tech actually got a lift, right? And S&P as a result got a lift because a lot of S&P is big tech. As usual, as US Treasury yields retreated, which means they went down just a little bit, and that's what we saw after softer than anticipated labor market data, and that's what caused that to happen, and as a result, 10-year Treasury note fell as low as 1.62 for a second straight day as it continues to back away from a 14-month high at 1.77 that it hit in late March. So that's great news for us, right? Those bond rates going down means that more money is going to be flowing into these big tech names that had kind of been not getting a lot of attention lately. So that's one thing. The other thing that I want to talk about that's a huge deal, you guys, is that we've been above now, second day where we, yesterday closed above the 50-day moving average, but now we are, continuing above it and kind of distancing ourselves from that. So it's absolutely amazing to see. We'll talk about that a little bit later as well. But if you take a look, right, and we can scroll back a little bit later in the video, but what we'll see is Apple typically stays above, the 50 and 200-day moving average. It's been below it for a little bit now, so finally, starting to climb its way back up. Let's take a look at the one-day chart, and we'll see what we see. And then at the end of the video, I'll talk about my covered call, which, as you can see, it's a little bit blown right now, but we'll see, what my options there are. So what we see here is, pretty much right out of the gate, push up towards this 130 level, rejected, took a little breather, and then pushed up. As you can see, right, we've got a line here at 130.20s. If I scroll in here, rejected a couple times, came back down, finally broke above, and now in the after hours, really starting to pick back up again, continuing up really nicely there. So great push up, right? Not only did we kind of defend the 128s, we came above it, defended that in the pre-market, but also kind of broke above the next level, right? So let's talk about future levels of support, future levels of resistance, and we'll see what we can see. So if you guys have watched me for a while, we drew out this kind of bull flag breakout pattern. Actually, if you take a look now, right, we've had great kind of breakout, not in one day, but continued, growth over the past few days. Especially this week, we've gone from kind of the low 120s, low to mid 120s to kind of 130, which is a great move for a company the size of Apple. Let's talk about future levels of support, future levels of resistance, you guys. So we've had a great week, okay? And the reason I want to point that out is because typically we see a Friday fade related to Apple. Typically we also see a little bit of pullback after, a few updates. So I'm kind of being mindful of that, not saying that we are going to see a red day tomorrow for sure. I mean, take a look at the momentum we've had this week. Take a look at, in the after hours, how up we are, continuing that push up, which is obviously always great to see. But if we see a little bit of a pullback, right, you got this 130 level right here, and then below that is the 128.50s level, and then we got the 126.65 coming in as well. On the upside though, right, next level to push for is 131.45, then 132.52. Those are pretty close to each other. So we'll see, kind of which way the stock moves tomorrow. Would not be surprised for a little bit of a pullback or at least a breather. But if the after hours is any indication, we we could also be seeing a green day tomorrow. That's why I'm looking at these levels to kind of see, you know, which way we head. Friday fade would not surprise me. It'd actually be, you know, an okay way to end the week because we are still up a lot. As you can see, we're now above all of our exponential moving averages, you guys, which is absolutely great to see. 89 EMA is at 124.57, which we came above this week, and for the past few days we've closed above that, and you know, things are finally starting to look up, which is great. If Apple continues this trajectory, we'll have the EMA stacked as well, which is pretty bullish for a company. 8, 21, 34, 55, 89, which means over the long term the stock is going up, so hopefully we see that happening soon. But until then, you know, we'll keep monitoring how it goes, right? We're nicely above the 8 EMA as well. That's in the 125.75 range. RSI is looking good. Now look at that, right? It's at 62.94 right now, so definitely approaching the overbought side a little bit. Remember when oversold was a concern of ours not too long ago? Now we're getting a little bit on the overbought side, so a little bit of a pullback or a little break would not hurt us. That's what I'm talking about. And actually, let me bring in my Tastyworks just because I think it's kind of easy to show you guys what I'm doing with the covered call. I'm probably going to be rolling it. I know one of you guys talked about letting them get called away and then buying new ones. My only thing with that is the Apple shares that I own, a couple of them are at a very, very low cost basis, and I don't want to necessarily sell them I'm not going to sell them voluntarily. If they get called away, that's totally different. But that's the reason why I'm going to show you the rolling thing here. Look, if you're okay with selling Apple at whatever price you sold the call at, which typically is how you should look at it anyway, then go ahead and let it go, right? If you were okay with letting it go at 127, which was my call for this week, then that's totally cool too. So in my case, and I'll be using that as kind of the base example for this, is I had the 127 covered call expiring tomorrow, which means I've given someone the right to purchase my Apple shares from me for $127. I got about 75 bucks for that, and clearly that option right now is worth about $3.30 to about $3.50 because, you know, Apple's at 130. So the ability to buy Apple at 127, right, you could turn around and immediately sell it. It's worth about $3 plus some change. So in my case, right, what I'm doing is I'm going to be buying this back. So I'll be paying about $3.50 to buy that back, or $3.40 is the mid. And then what I'm going to do is I'm going to go out to next Friday. And there's a couple things that I could do, right? I could straight roll this, which would give me about $58 more, giving someone the right to buy Apple from me at $127 until next Friday. I get $58 for doing that. Now, if I want to move my strike price up, this is for, I can pay about $15, right, to move that to being a 128 covered call, which means now I'm selling my shares for 128. And that sounds a little bit weird, right? Why am I paying $15? Well, a different way to think about this is you are paying 15 cents, right, for every dollar you can potentially earn. So let's say your Apple shares get called away at $127, okay, times 100, so you'd be getting $12,700. In this case, by paying an extra $15, you can get your Apple shares called away at $128, which is $12,800. So you get $100 extra by paying 15 cents. So my approach tomorrow is I'm probably gonna either roll out and up, which means out being in time, so from tomorrow Friday to next Friday, and up being from 127 to 128. And the reason I'll do that is because, you know, kind of the reason I just talked about, 15 cents, or paying 15 cents to get a dollar. Another thing you could do is you could pay about $84 to get $200 more if you think Apple is going to stay up. My kind of thought process right now is if Apple has a little bit of a Friday fade, as it typically does, then I can move to the 128 strike. My hope is to not even pay 15 bucks. My hope is to leave an order in for, you know, either 0 or 5 cents and see if it fills. If it doesn't, then towards the second half of the day I could do that. So that's a couple things you could do. You could move it to the same strike if you're okay with letting go of your shares at 127 by just, you know, rolling it out to next week. You can get another $58. So I've gotten $75 already. I'm gonna get another $58 by doing this, or I could pay $15 to kind of get you know, my shares being called away up to 128. I personally don't like just buying it back because, as you guys saw, if I get rid of this, I'd have to pay $3.50. So I'd have to pay $350 for something that, you know, that I got $75 for. So to me, it's just not the smart move. That being said, if it runs next week, maybe this was the smart move, but I can keep rolling it and rolling it and rolling it and collecting a little bit of premium while waiting for that pullback. And usually the pullback is where, you know, I'll set in an exit order and then look to re-enter. That's what I'm looking at, you guys. Another option is you let your shares get called away at 127, then you sell a short put to buy Apple at 127, and if it falls below, you buy it. But I'm probably gonna look to roll tomorrow, like I said, from tomorrow, April 9th, 127 call to next week's, you know, most likely 128 if I can get it flat, or, you know, 127.50 for a little bit additional credit. That being said, you know, make sure you always kind of understand what you're doing and why you're doing it. Apple is doing really well, so something tells me, you know, either things can happen, right? The momentum can continue until next week, but realistically, it's gonna get to a point where it pulls back. Now, if it pulls back tomorrow, great for me, because I have that call expiring tomorrow. If it doesn't, then, you know, because I'm rolling it out, I'm buying myself some time for Apple to pull back and for me to be able to exit, you know, for a profit. Covered call is a great way to, you know, make money on a weekly basis. There are times when Apple moves like this and it goes against you, but typically, you know, those will expire worthless, or you can, you know, as I said, always roll them out. So hope this was a little bit helpful. I'm going to try making a video over the weekend on covered calls in general, since I've been trying to do them more and more often. I'm actually starting to track them right now to see what kind of percentage gain I can get, as, you know, a lot of stocks, or I'm looking at like different ways to play kind of without having to actively manage like I would in, you know, a call or a put option. So let me know down in the comment section what you guys think of Apple, and I'd love to chat with you guys down there. As always, let's remember to be a bit better every single day, and until next time.